What is up, guys? So this is a video series, part one of part two. It's just me trading live today. I wanted to do this instead of live trading to kind of showcase my skills because I trade a lot better, obviously, by myself. So in this video, you will see me walk you through exactly what I'm doing, how I'm doing it. When I do it, I make about $12,000 in the hour and a half I'm trading here. So here is the first part. Enjoy. What's up, guys? Jared King here. I want to talk to you guys about this amazing trade I'm in right now. I got to exit it. So I want to walk you guys through why I took it and why I held it for so damn long. You know me, I'm a pretty short-term trader. I usually don't hold trades for very long and I keep my risk really tight. That's kind of my thing. But in this case, I held this trade for 150 points. That's a really big trade, right? So I'm going to break down why I took it, why I stayed in it, and give you guys the lowdown on that. And you can see that this is a funded Apex Trader funding account right there. My balance is right here, right here. You can see that the numbers are in fact moving. You can see that the replay is not on. This is not a demo account. This is a live trade that I'm currently in, about to close actually. Now that we got all that covered, let's get into it. I'm going to go ahead and exit this though, because I want to go short here. As soon as it kind of rolls over, I'm just waiting for it to like roll over here. And then we'll go ahead and bust this bitch short and take her down to here. So first we need to go to a higher time frame to explain my narrative for the trade. I'm going to go turn the executions off. I just want you guys to be able to see the proof. Now that we got this cleaned up. All right, so the start of this trade began with a thesis. My thesis was that if this gap that's right here that you can see in the gray, that's the gray is that RTH gap. If it could hold over here, then I would be interested in taking this long. Damn, it's still going up. Yay. All right, cool. I'm gonna just hold it until I don't know where it's going now, but it must be above. Oh. You guys are about to get taught right now. So I'm so sick of this liquidity shit, man. I gotta stay off of Twitter, guys. Twitter is killing my soul because I have to sit there and watch these dudes that have no idea about price try to teach you guys, and it just is just sad, man. And they're so off base of what actually is going on in price. They're trading on an opinion and not price. They're taking someone's opinion about price and not looking for themselves, not even a little bit. If you spend 5 minutes in this chart, understanding what I'm going to teach you right now, it will be such a game changer. You will develop such a better understanding of price than they have. It will blow your fucking mind. I guarantee you that. So for today's example, this low right here, here's yesterday, right? That's yesterday's session, correct? So then price comes down, flushes, right? And everyone's like, oh, that was a run on liquidity. But they're not looking at RTH gaps, are they? Because me and my crew had this little gap on our charts for the since Thursday of last week, I think. This is where it's from, right in here, I think. Now let's go to regular trading hours and I'll show you what I mean. And you're going to see that it goes exactly to the tick and fills this in. So here, that candle right there, the opening of that candle is the start of the gap. And then the next candle at 9:30 a.m., the opening of that candle is the low of the gap. Let's go ahead and put it back into regular trading hours. But first, I want to circle this low. Does that look like a liquidity run to you? Does it? Yeah, it does, right? But it's not, is it? No. But liquidity run, did the stops, losses, trigger the reversal? Did an algorithm push price down to run liquidity? I want you to seriously ask yourselves this. Look at this price. Look what I just showed you and ask yourself this. Who gives a fuck what anyone else would say? What would you say? And it's fine. If you don't agree with me, it's fine. Then I need to show you more. Then I need to make it more clear to you. Then I need to prove it to you, because probably like, why in the fuck do you care anyway? Is what I think. Because I don't want to see you struggle, man. I spent 2 years of my life, almost 3 actually, straight obsessed with ICT's content. Obsessed with it. I started Facebook groups. My YouTube channel was originally all about ICT concepts, and I was a true believer. And I don't think it's bad. It's better than 90% of the other shit out there. That's for damn sure. But it's not what is taking place in the futures market. There are some elements of it that are, yes, but this liquidity narrative is not there. It's not here. It's not. Because this taking place, everyone said this was a turtle soup. I bet you see it on Twitter everywhere right now. Low a day caught. I could have caught that turtle soup right there. Turtle soup will make you millions. Bro, no. It's filling in an inefficiency because that the gap is unfair delivery of price. Market makers are required to, by law, to give buyers and sellers this equal opportunity to buy and sell. Therefore, when something like this occurs, they trigger an algorithm that's not there to manipulate price in a sadistic way, but rather to give the opportunity to someone who wanted to buy here or sell in this area that could not opportunity. Hope that makes sense to you guys. Um, yeah. So that is step one that I saw. This is the first thing I saw. I investigated. I was like, oh shit, that gap held. The plan was if that gap held, we would expect to see this filled in and come up into here. That held. Price came up. I went short in here. Right as it was rolling over, I went short. I was thinking it would come down to half back of here, but it came to the top. So once price came to the top right here, I was like, oh, it's a phase one bounce. This is acting as balance. And then I even went a little bit further and I was like, you know what? It's probably this to this. And it's probably half back. And then boom, it was. And I was like, oh shit, there's your half back touch. It's not quite perfect, but it's very close, especially if you put it on that last one there. So it'd be the high of here to the low of that candle, 50% of it. There's your half back to balance. So here's your balance. And then price moves out of balance, comes back. You get your first touch, comes back. So that's phase one is doing right here. So price leaves the balance area, comes back to the top. Phase one initiated, comes back to the balanced area here. And then from there, it goes to half back to the tick. And then the narrative for me from that point on switched bullish. There's no reason for me to be bearish for any reason. Once I saw this like to the tick there, started rallying up. I got stopped out in here a few times, trying to go long with a little bit of risk. As you can see here, I was only risking very little. So was I using a market structure shift or anything like that? No, not at all, guys. Simply reading the market structure, looking for how price is reacting to these areas. Is price going through balanced areas and going to the upside? Yes. Is price respecting half back of the previous balanced areas lower? Yeah. So if you've seen that, like if price is coming back to these balanced areas. So I went ahead and made it a little bit bigger there so you guys can see what I'm talking about. So when price came up to here and then came back, that first touch right here tells me a lot. And the fact that it came back to those dojis right here. So you have a group of dojis right there, and then it comes back to them half back to the tick. Like it should. Let's zoom in here a little bit more. So dojis are balanced, right? So what's price do? It drops down, comes back and rejects out of balance. And then from there, it does what it's supposed to do. This is expected by me. Once price goes here, comes back up, and then I expect it to go half back, which is that line right here. So once that happens, price then rallies up and starts trending. And what's it disrespecting right here? If we go to a 3-minute, it's a lot more obvious. All right, so here we are on the 3-minute. It becomes a lot more clear. You'll see what I'm talking about here. So you had this area here. So you had 1, 2, 3 candles in a row. So that would make this balance. 50% of that balance is right here. Price comes down, testing the top of this here. That's phase one. Boom. Comes back to half back. Now, from this point, I don't expect it to go up. Never. Sometimes it will, but rarely, very rarely, unless it's like a high time frame balance. I expect it to go down to the half back of balance, rebalancing this here. So this here is rebalanced. It's good to go. It does not need to come down into here. This is, it might hit it at some other point, but not doesn't need to right now. It obviously has an upside objective that it's chasing, and that's right here. So all these ICT dudes are going to be thinking that this is where you should be going short because that's the end of the fair value gap, but in reality, it's not. They would also think that this is where you should be going short because it's a breaker. Did this work? Nope. Did that work? Nope. Only half decent rejection you got was at the half back of this from low to high, which is right there. The price is trending up. I entered right in here, this area here. Stop went just below the half back of that move down there. And then I've just been letting it grind. So that is the trade, guys. If you want to learn more about this, check out my YouTube channel. I stream every single day. Understanding advanced market structure took my trading. So here's my YouTube channel. If you go to lives, you can see here every single day we are streaming. So check it out, man, if you want to learn more. I'll see you guys there.